Well, good evening, traders. This is the FX Big Dog, and welcome to the market update. If you have any questions regarding this review, please email me at analysis@infinitumfx.com or click on the online link on our website for a live private chat with one of our representatives. Don't forget, traders, that if you would like to follow me on Twitter, you can just search the name FX Big Dog or Infinitum FX on the Twitter website and you will find my link. Alright, traders, just a note, a few notes to note that trading the Forex market is risky and is intended for only investors that can afford the risk. This video presentation is for educational purposes only and not offering trade recommendations. If you choose to follow a trade presented in the video, it is of course at your own risk, and we accept no accountability for your actions. We are of the understanding that all traders have the full understanding of the risk and are responsible traders. Please do not trade live accounts unless you have traded a successful strategy on a demo account for some time. Alright, traders, we don't have much time. Let's get started. Alright, looking at the Great British Pound, the daily time frame, we can see that the market is still holding in this crown setup. Remember, we saw the bearish crown setup. The market pulled back to the 382 bounce, looking for the objection point down here at the 618. We call it the D extension for some, but of course for others we call it the objection point. This is where the market's heading towards 57.96. Now, coming off the 382 bounce, we expect the market to dip down reasonably quick because that is one of the fastest retracements of the fib levels. So we expect the market to dip down to 57.96. The market is still holding inside this range, this AB up boundary of the intermediate swing. Of course, there it is there, showing an up intermediate swing. The market has pulled back to 382 bounce, and from the 382 bounce, it took off, tried to break out of the B high. As you can see right here, it came back inside the B high. So we're looking at trading back inside the AB boundary of that intermediate swing. Now let's move on to the 240 time frame, see if we can pick up something on the 240. Well, yes, we are still in the up AB boundary of the intermediate swing, and I'm going to go ahead and compress the charts. There it is. You can see that the market has shown an up AB boundary, a low down here at 59.82. Now that's surely going to be taken out once we head to the D extension or the objection point of the daily. The short-term swings is really where we want to focus on, because once we hold with the bearish swings on the short-term swings, of course the market is still in retracement of the intermediate swing. And as you can see, there it is there, down AB swing of the short-term swing, down AB swing of the next short-term swing. This is the current short-term swing. Market pull back to a 382 bounce, and on its way to the D extension, the objection point, which is down here at 58.66. Now that is slightly short of the D extension on the daily. Okay, so do note that he's slightly short, so take profit on the swings that you trade. So if you trade the short-term swing of this 240, take profit just short as you hit the D extension of this 240 time frame, which is there at 68.67. Now you might ask, how far do you take profit from that? Well, being a 240 time frame, you might want to take it 20-25 pips short of this D extension. So being 58.66 as the objection point, you might want to take profit at around about let's call it 85 would be 20 pips, so let's say 58.85 would be 20 pips short of that. Maybe 91 would be around about 25 pips short of that. So 58, 95, 91, 58, 85 is about the area where you want to take profit. Now remember, let's go back to where we see the A low. Remember, when the bulls, or in this case now, when the bears score a point, there's going to be some pullback. So remember, when we break 59.82, we're certainly going to get some pullback in the market. So watch out as we take out the low at 59.82. Remember, traders, we are looking for the break of this low at 61.57, or in this case 56. So 61.56 is a significant level of support right now that we need to break through before we even start heading for this D extension. I mentioned also early on in last week's video to watch out for this de-extension right here at 60.53. That is certainly a level that the market's going to bounce off. Whether to say that that's where it's going to hold and start going bullish for a while, we don't think so. We certainly think it's going to go deeper and find perhaps 58.70 around about that area before any type of pullback. Now let's move to the 60-minute time frame. The 60-minute time frame is showing bearish on the short-term and intermediate swings. There it is. I've compressed the charts. You can see the market is showing down AB swings. Market pullback to a 618 bounce, just shy of the 786. Okay, so pay attention, and the 786 is from the short-term swing. So pay attention as it gets to the 127, because that'll certainly be a factor. Now we've spoken about on the 240, we spoke about 60.53 as an objection point that we need to pay attention to. Now look how it converges with the 127 of the short-term swing. So pay attention, traders, as we get there. There's certainly going to be some pullback, maybe not deep retracement, but we're going to get some type of retracement when we hit the 127 of the 60-minute swing. And the 127 is showing at 60.81. Of course, we are on the way to the de-extension of that intermediate swing, which is at 58.71. 58.71, but we're certainly going to get some support coming off 60.53 and 59.80, and then of course 58.70. Alright, that is pretty much where we're at right now. Whether we should hold the short-term swings right now, absolutely no support other than these highs right here has come into effect. We have had a bounce of these highs. It could be temporary support. Let me go ahead and draw a line in here. You can see there it is there. There's temporary support coming off those highs, but the market should, if we continue with the downward swing, the market should take out this low that is created here at 62.36. It should take that out and head further down towards that de-extension as we spoke about early on. And that's pretty much the wrap up for this evening. Of course, we're going to try and add the euro, the Swiss franc, and the JPY into our videos, but that will only take effect towards the beginning of September. Thank you, traders. This is the FX Big Dog, wishing you joy, peace, and successful trading.